Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Natalie Campisi, home and mortgage expert at Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews. To discuss 3 tactics for first-time home buyers, we will also discuss how the Biden administration will approach housing. Natalie, it's great to see you again. Welcome back to Trade Talks.
Thank you so much, Jill. It's great to see you.
Why has the housing market been a challenge for first-time home buyers?
It is the age-old law of supply and demand. What we're seeing is very low supply. Construction on new homes is lagging. People are aging in place, so they're not selling their homes. And there has just been an increase in demand over the last few years. But this past year has really sort of shocked everyone. People are buying homes at record levels, and that is just sending prices higher and higher, which is sort of squeezing out those entry-level buyers that might not have a large down payment. So it's been really tough, and this is for markets across the United States. So we're not just talking about expensive coastal cities, we're talking about places like Sacramento. So now that people can work from home, we're seeing these Silicon Valley workers move out of those, expensive San Jose markets where the median cost of a house is $1 million to places like Sacramento. And what's happening in those cities is that, teachers and folks who are earning, average incomes are not able to afford a home there. So they're moving even further out.
Let's review tactics to get ahead. Why should one work with a lender?
It's really important to work with a lender because a lender is going to guide you through the process of being able to qualify for a good mortgage. So a mortgage with a low interest rate. Right now, we're in a great interest rate environment. Interest rates are around 3%. Some people are even getting sub 3% mortgage rates. So for first-time buyers, especially those who have never done this before, have never gotten a mortgage, a lender can help you even before you're ready to get a loan. So you can fill out a pre-approval application and they'll be able to assess where you are. So let's say your credit score is not quite there yet. Maybe you don't have enough of a down payment to qualify for a competitive rate. They're going to walk you through that process. So it might be that you're not ready to get a mortgage for another 6 months. You need to improve that credit score or save a little more for a down payment. A really good lender will help you through that process.
How should you compare your goals with your financial potential?
That's a great question. It's important to be realistic. Americans are so keen on home ownership. It's sort of one of our cornerstone dreams here in America. And so it can feel a little daunting when you feel like you're ready for home ownership. Maybe you have a family, you have a good job, but it's not happening either because of the market you're in. Like I said, it's so competitive. You're competing with multiple bidders, investors, people who are coming with big down payments. So it can be really tough for some of these first-time home buyers. So my advice is to really work with not only a lender, but also a real estate agent to kind of get a practical sort of view of what your current market is. And so some options really are maybe looking outside of your area. Like I said, people are moving farther and farther out. We hear about this boom in the suburbs and exurbs. That is a really a real trend right now for home buyers. So that's one tactic. Another one is just, look at your salary, what you're making. If it's not enough to become a homeowner, because it's not just your mortgage, you're looking at property insurance, taxes, any kind of repairs, it's quite expensive. You might want to reassess, what your job is. Do you want to try to increase your income either through getting a certification or maybe exploring a different path or even getting a second job? Some people have done that just to kind of get over that hump of that down payments and those first few years.
And let's talk policy a bit here. What's so interesting is President Biden is entering the White House for the second time, facing a housing crisis. And while both crises are complex, they're also very different in nature. Explain to the audience why these two different times in our history are different.
Absolutely. I mean, it's really interesting because, as you know, he entered the White House the first time during the housing crisis, the financial crisis, the subprime mortgage meltdown, and that was a complete disaster. And now he's entering it again, and it's totally different. This is sort of a health-driven crisis. So it's not because there were bad loans made or because Wall Street did anything wrong. It's because this pandemic has shut down businesses, and now homeowners and renters are just not able to afford their housing payments. So one of the things that policy experts are calling for is that Biden really kind of takes a lesson from the past. What happened during the first housing crisis in 2008 is that banks were bailed out, as we know, but a lot of homeowners were sort of hung out to dry. So they were left with foreclosures, bad credit, and things like that. The money from TARP, which was the Bush bill that Obama also kind of picked up and used money from that bill to help bail out banks, it kind of skipped over homeowners. What policy experts are saying now is instead of skipping over these renters and homeowners, let's help them, especially renters. We have about 11 million who are on the precipice of eviction. And right now what's going on is that we've kind of kicked the problem down the road. So the rental eviction moratorium will expire March 31st. That's right around the corner. And there's no concrete solution. So what that means is when that eviction expires, those renters might be on the hook for whatever back rents they owe. And these are people that have been out of work because their restaurant was shut down, their business was shut down. So what policymakers are saying is instead of giving the relief to the banks, let's give it to these renters, and the money will flow upstream. The banks will get paid. The renters, won't be out on the streets and with bad credit. And so that's something that hopefully the Biden administration is thinking about when they move forward with policy.
So just to clarify, when we say the moratorium's up March 31st, they're still responsible for the past 12 months, which if they can't make the monthly payments now, how do you expect them to make monthly payments times 12? You can't get blood from a stone.
No, absolutely. And that's the problem. I mean, right now we have about $25 billion in rental relief assistance, but experts speculate there's around $70 billion due in back pay. So this is not nearly enough to cover what's owed. And the other problem is that no one knows how this money is getting distributed to these renters. So that's another problem that we have to solve. Biden has proposed an additional $30 billion in rental assistance. We're not sure if that's going to pass, but it's probably not enough to help everyone. So there's got to be a concrete solution going forward to really help these people in a meaningful way.
Yeah, because when you think about it, at the end of the day, if people have home insecurity, that adds to the cost of mental health, that adds to the cost of healthcare issues, that adds to the food crisis that we're experiencing. We're the richest country in the world, with people to feel insecure about their homes and food, that will be more expensive at the end of the day exponentially.
Jill, you're absolutely right. It's a domino effect. And we saw it in 2008. Some of these people that lost their homes, they struggled for over a decade to repair their credit, to get back on their feet. It can have a devastating impact on people. And this is why Biden is sort of making the case right now that we need, although this $1.9 trillion package that he's proposing, he's hoping lawmakers will pass, is a lot of money. I think he realizes from last time that it's better to pour in this money now in assistance and helping people than doing too little. And the ramifications are far greater down the road, like with what you just said, all of the resulting problems, the health problems, the unemployment, homelessness, all of these things.
All right, Natalie, great conversation. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.